Despite all these massive metrics, our next guest says we're still in the early innings of the AI build-out. For more on just how critical today's earnings reports will be to that narrative and who's best positioned into those prints, let's bring in John Belton, Growth Portfolio Manager over at Gabelli Funds. Tim Seymour and Barbara Duran are still with us as well. John, you kind of heard the conversation about, the economy and Claudia and the lack of data. Does any of that factor into how you are viewing the economy vis-a-vis the massive moves we've seen in these tech, media, and telecom companies on the mega cap side going into these prints?
Well, yeah, nice to be with you, Dom, and Tim and Barbara as well. But I think, as always, we're following whatever data we have access to. In this case, in this environment, we have access to less government data, but we still have access to company data. So we're following data releases and seeing how that's going to inform our expectations for company earnings, as always.
What has that data told you so far? I mean, we have the big ones coming up here, but you've been following along with the ride. Is the earnings season and the commentary supportive of even higher valuations for these tech, media, and telecom companies?
Well, I'd say it's so far been supportive of higher earnings expectations, which is what's been driving stocks. I think Barbara cited the stat that over 80% of companies that have reported so far, S&P 500 companies, are beating revenue expectations. So that's a constructive environment. We had a read last night from Visa, which shows spending trends through the first few weeks of October, which looks like the consumer is still healthy, and that bodes well for some of these big tech platforms.
Every time we have valuations climb to these record high type levels, whether from an index level or from the component level, many of these companies are at or near record highs right now. There's a debate about whether or not that kind of thing should be bought, a record high, or taken profits on. From your perspective, what needs to happen with these earnings reports over the next 2 days for these key mega cap companies to make sure that the catalyst is still to the upside?
Yeah, well, first, let me just define what record high valuations mean, because I think speaking about the tech group first, they're record high market caps, but they're not record high valuations. NVIDIA is kind of the perfect example of this. If you rewind 3 years ago, NVIDIA was trading somewhere 25 times forward earnings. It's more like 20 times today. So, that just goes to show what's really driving these stocks is fundamentals. And so I think you keep buying these stocks so long as the fundamentals remain strong.